Hi and welcome to a weekly outlook. This is Kim speaking on Monday the 11th of June. So we've got a lot going on this week. We've already had a lot going on, it seems, over the weekend, and there's maybe more to happen as we progress through this week, particularly on Wednesday, Thursday. So no further ado, let's just have a look at the fundamental data that's coming out. If I can get the right one. That's not the right one at all. It's this one. Here we go. So the fundamental data coming out this week. Already had GDP, the manufacturing production data coming out this morning. Big GBP I was reading over there. Big variation from expectation this morning. It's worst for about 5 years, I believe I read somewhere. Not that I keep such detailed records of the significance of them, but it is particularly weak here. So the worst figures, as I say, for a long time, which may just start pointing, may just weigh more heavily on the pound as we run through the week. A key thing to be looking at tomorrow morning, though, key data still looking there really at the pound as the focus, is that average earnings number coming out as part of the monthly jobs jamboree. Expected to come in around about 2.5%. Previous was 2.6. If this was to slow down more, again, it would again put more pressure on the pound effectively. It would suggest that earnings are nowhere, average earnings. Inflation is keeping up nowhere near with actual inflation, and be quite a countermeasure. So very key figure for tomorrow morning. That's I've got 4:30 on here. It's actually at 9:30. And the claimant count. These figures are a lot less significant. Unemployment rate, it was to go up to 4.5. Well, yeah, it may chip something there, but realistically, the claimant count and the unemployment numbers are not so significant there. But the average earnings, the key one. Moving through the week, then we've got inflation, US. I've got to put these times right. Just sorry, I do really need to log in and get my login date to match, because otherwise I'm going to give you some wrong dates and I can't have that. Let's move it back to the calendar. Here we go. And this week, make sure we've got it this week. Yep. Phew. Right, so 9:30, got those. Moving through then. Make sure I've got the right days as well. It helps. So inflation 130, that's actually tomorrow as well. CPI inflation, it's important number to gain just ahead of the FOMC projections, etc. There was this concern that inflation, it wasn't running significantly high enough to continue increasing interest rates, but we'll see there on Tuesday, which leads us into Wednesday, which yes, we've got the inflation on the UK, which again, anything dropping off on that will reduce the pressure on interest rate increases again, so it will just all add to the bigger picture there of not such good news for the UK, for the pound. Side of that, PPI data not so important here, but the traders will be really Wednesday. It will be a case of sit on the hands and wait for this at 7 o'clock. By the time it gets mid-afternoon, crude oil inventories may move the market a little bit. The only thing that could, in between this, create volatility, of course, is that well-known 5-figure name, Trump. Just checking, it was 5. Okay. So, and these projections are important. In particular, they'll be looking at the dot count. Interest rates are expected here to go up, so that's already pretty much priced into the markets. But the dot count, now what's the dot? I'm just going to have to move this across just fractionally so everyone can see it. Okay, so what is the dot? Well, this is the projection at the end of the year of where the members of the Fed believe that interest rates will be closing in on. Now, as you can see, there's a close sort of run, 6.6, sitting there at 2.25, 2.5 sort of percentage, somewhere in that region, on average somewhere in that area, and one just above. Now you've got these two laggards back here still believing it'll close down lower. They could be the right ones. contrarian viewers obviously, but if one of those was just to start pitching up, or one of these was to pitch from here into here, it could make for some bullish times. Now they will be looking at those. Now these are released. Last time we saw these was the March figure, so I believe they get released in this current today at some point, or if on the minutes of such afterwards. It depends on when they come out. I think they maybe on the short side of things come out earlier, so this will be watched and maybe even commented on. So that's the 2018 figures, where it end up. As I say, it's the dot plot, as it is the posh name for it. So there will be focus on that, because that will tell us whether there'll be expected to be 3 or 4 interest rate increases this year. Okay, so coming back then, just to finish off the news front there, I was doing it on that software. Let's pop that back in there. Actually, let's go back to the calendar here. So key day then on Wednesday. Watch for the interest rates. They should be. The expectation is 2%. So that's, as I say, pretty priced into the dollar. Anything or any comments coming out with a statement that's going softer or harder may give a bigger effect, and it will come from that and not the interest rate increase, as I say, which is priced in. Employment data for the Aussie dollar always creates a bit of volatility there if you're up around about 2:30 a.m. UK time, but if you're trading it from Australia, there's some volatility for you. Later in the day, their retail sales UK always gives a bit of a kicker, and again, very important to take into account all the figures that I've been talking about so far. It's quite an important week for the pound, or a very important week, I would suggest. Thereafter, the ECB data. So 12:45 we'll see the 00s coming out, but thereafter the press conference, and if we see any comments come with that financing rate at that time, or any statement that comes out with that could significantly create some volatility around the euro. Now they've already suggested they're looking at giving a timing or talking about the end of quantitative easing, so it'll be interesting if they just defer that to the next meeting, the specific time, or whether they actually get their finger out and give a specific time. What they probably want to do is the easiest transition possible in terms of telling the press and anyone else, so which creates more fuss than anything else, but they'd be better off just telling us. But it is priced in to a degree that it's going to be dropped out. It's just the timing of such, so we'll see how. That's quite a key meeting then, 1:30 Thursday. If off into Friday, and well, not a lot here. Bank of Japan rate, of course, and policy, etc., may create some volatility early hours of the morning there. Always tentative data, so it's never a specific time given, so difficult to follow it. Thereafter, really the news here, capacity utilization in the States, etc., relatively low key data, may create a bit of volatility in the quiet market though. Okay, so quite a lot coming out this week in key data, and let's have a look now. The euro is obviously one that's likely to be affected by this. Current situation, we ended up last week on a bullish pivot swing. It did come away a little bit towards the end of the week there, and then had a bit of a bounce, which it seems for a bit this morning, but not managed to get quite as high as the previous highs there. Come back to the dailies there, so we haven't gone quite into those highs yet. Choking around at the moment, short term. Well, it's put a bearish pivot swing in, but then it's put this sort of hammer candle in coming the other way, and consolidation leading up to Thursday is a possibility, without any doubt. But if you see any sort of moves, we've just got to be aware of that daily 34. It may just get in the way there a little bit. There is the weekly 8. It's just looking like we're just running into it, just short of that at the moment as well, just above. So a couple of figures there in terms of may give some resistance, but if we can get any runs on these, I'm still really looking at daily 50. I've got a swing long going, and there's the target, but we'll see how it runs this week, or through this week. Could be all over on Thursday, of course, one way or the other. But as I say, intermediate, I still see this as still has some bullish potential. Yeah, technically the reason why it's there, just excluding anything else, is it's broken this trend line, put in high lows, high highs since then, and it's still running up there. If you do come down to the 4 hourlies here, it's just sort of confirmation higher. All the lows that have come through so far still higher, and higher highs coming through there. So until we break this trend line effectively, which it still needs to break its weekly pivot to do so, I'm still erring on the bullish side there for now. Okay, the pound. The pound to me has major risk in it. Oh, sorry, I should come back. One thing I didn't look at, and I talk about quite a lot lately, is the sentiment. Just have a look at sentiment with the euro, looking at the fund managers, institutional first, and well, there's an edge up on the bullishness there, just marginally, but so is the bearish. It's really a bit of a flat game there. There's no absolute clear way there. Maybe the funds themselves are the hedge funds getting a little bit more bearish on this. It's a net position switching more negative there. It's a tad more bearish at the moment, maybe just hedging their own positions as they run through but this week, but either way it's still looking like, well, there's an expectation of further downside. The retail side, we're look at two different ways. The non-reportables here, which are pretty flat, and we can also look at the retail sentiment here on just looking at across Oanda's book there. And if you look at the euro dollar 56.44, it's pretty flat there as well. So sentiment of retail traders not really showing us any concern to be trying to trade the other side of them. They're flat. They don't really know is the answer. Right. So now I can look on the pound first, and well, with the pound we're seeing here, then it's come back to the weeklies first, and again it put a little bullish pivot swing, didn't quite get through there. The problem is the moving average has come down to, traders will trade and short into these moving averages, haven't quite hit there yet, so there's potential for it to be hit. The overall price action of what we're seeing here is like a little shooting star doji almost, and weakness, and as I said, the fundamentals are certainly not helping the pound at the moment. This has already given back a good chunk of last week's gains there in one day. The ranges are relatively modest, and unlike the euro, we have seen a lower high confirmed here and a break of the trend line on the 4 hourly, so sort of just coming down one more time frame here. So there is, to me, an element of weakness that's showing through there, which may continue. Let's have a look at the sentiment. I'm doing it slightly the other way around today then. We'll look at the sentiment first. Let's have a look at sentiment next then. Sentiment on the let's have a look at the asset managers first here, and where we are, and getting more negative, and even the long positions they're holding are dropping a little bit, so sentiment is getting more negative. I'm not surprised there really. Hedge funds, let's have a look at their edging up on both, fractionally more bullish than bearish maybe. Again, this may just be a hedge for the hedge funds. And the retails side of things, well, no surprises there. Most are getting a bit more negative. Now, when you look at the retail sentiment elsewhere, though, it's quite interesting to see how bullish it is. Maybe the commitment of traders, or the traders trading futures, etc., are more sophisticated, but these guys at the moment are still quite bullish. So there's not as bullish as it was. It's well into the 70s last week at points, or the week before, but it's falling slightly, but it is still erring towards that bullish side at the moment. Okay, let's move on here, but as I say, really picture wise here, it does look to me more bearish. Dollar yen, it's a very difficult one to read on a daily basis. It's not really making anything easy for us. The very fact that it's become a safe haven trading tool of late is just making it really a sort of does your brain in some days, does my brain in some days, in terms of the fact that it's going up. It's totally correlated with the likes of the pound and the euro, when it should be, obviously, because it's the dollar yen, it should be doing the opposite. But anyway, At the moment, edging back up again here. It's from a weekly perspective, it is pretty cut. I mean, look at the last 1, 2, 3, 4, 5, 6, 7. We're in the 7th week, and it's in quite a tight old range through most of last month there. It did pitch out a few times, pushing up this morning. It looked earlier on like it might have rolled over, but still pushing up here at the moment. Let's just look at the 4 hours. This just sort of give you an idea of a week between these sort of green lines here, a week of what it's really been doing, and large phases of or long periods of just consolidation and not really giving us too much of an idea. So nothing to be done there at the moment for me. It may be erring. I mean, the early green shoots literally may be on this 4 hourly bars, looking towards the upside maybe. Let's see. Yep. I mean, a lot of this becomes this sort of analysis, technical analysis, could be knocked out the water come Wednesday, Fed Wednesdays I should call it. But we'll see, or Dotty Wednesday. So looking erring towards that sort of bullish break, and it could, if it breaks that 200, well then we could be pushing up back to those prior highs possibly. As I say, not an easy one to trade intraday or swing really at the moment, so you've got to have some patience with some of these markets. I should just go on to the commitment of traders here and look at the this is the other way around, dollar yen. This is yen dollar, so looking at the yen position, let's have a look at the asset managers, institutionals. Pretty flat looking here in terms of the long side. Pretty flat there. Leveraged, pretty flat there. It's dropped off a little. Both have dropped off since the previous week there, so it's a slight net position positive, so we'd expect the yen to be dollar yen to be going down, but it's not really happening. It's just the overall position sizes have dropped down here, not a lot of clue really coming from that. Okay, Aussie dollar then. Aussie dollar, let's have a look. Weekly picture, well, it did run into last week. It put this shooting star. There's a lot of well, this is the odd one in a sense. The pound and the euro was sort of looking like little bullish pivot swings. This has gone the opposite here. Shooting star into 21,200 sort of area, looks weakish. Coming back to the dailies, as we saw last Thursday, Friday, selling off. There are some key data. There is some key data, I should say, coming out this week, which may just either hold on to this sort of these previous higher lows that are still sitting in there and higher highs. It's a key sort of area. The 4 hour is not probably going to tell me anything more. No, bit messy. Maybe Friday it was starting to show like it was maybe going to break down even lower. But that daily, if you just draw the line across the lows, the dailies there is still on a sort of a bullish course, bullish, yeah, edging bullishness. Let's have a look at the sentiment. It's not one I trade intraday. It's not something I'd really look to be swinging at the moment. So the Aussie dollar. Let's have a look firstly then at the asset managers, pension funds, etc., institutionals. Very bearish view still remaining on the Aussie dollar there. Now, as I always say, the thing is you've got to bear in mind that some of this may be just hedged positions. The hedge funds themselves, though, well, still perhaps even looking at the net positions more importantly here, just edging down slightly more, so still negative. So there we go, that's where the Aussie is, which could suggest a rollover, or we may see a rollover at some point technically. Fine, okay, finally the Canadian dollar. Looking at the currencies here, Canadian dollar's been a very difficult one to try and technically work anything out. It's still big picture here on a weekly basis, still managing to put slightly higher highs in, higher lows kicking through there, so there is an on a bullish bias, as my trend line shows here. Very difficult intraday to be doing too much with it. It did put a biggish gap in the markets, and it's looked like they could tempt some traders in this morning, and it would have punished any traders that have gone chasing the gap this morning, because it's just literally just pushed on again. So overall, a bitty old, I don't know why I've just come down a time frame, sorry about that. Madness. Bitty old time frame. I meant to go up, and it's chopping along. There's not a lot I can do there. Sentiment wise, we can look at it for the sake of looking at it. We've seen oil coming off, which I'll cover in a moment, but sentiment on the CAD. Now this is looking at again, instead of dollar CAD, this is the CAD dollar look view. Let's have a look what's going on there. Relatively neutral, not big positions sitting there in the CAD either, so but quite neutral. Major little net position slightly up there on the funds, on the hedge funds. Then still negative look. Still quite a lot of shorts, flat really though. Look at it, I mean flat lining. So say it's not a great intraday trade. You may catch something on a high or from a high, previous low, sort of, or into some key support to get a bit of a ride out of it intraday, but it's a bitty old one, best avoided in my book. So that's where we are with those. We'll have a look at oil because I've been looking at it quite a bit lately. I'm just going to look at this pure technically. I could look at the sentiment on it as well, but weekly wise it's continuing. It looks like it's pretty much, although last week it ended up with that little doji candle, which a bit of status quo going on there, but already this week it looks like it's continuing the downward momentum. That's broken the trend lines that were sort of sitting across there, so it's in a bearish trend in my book. You don't need to come down any other time frames to be looking at that, so looking rather bearish at the moment. Okay, so oil, and finally I'll look at the S&Ps because people ask for them. Quick look at the S&Ps. There's no point looking at the sentiment. Sentiment's a bit weird on these. Not as it doesn't play out the way it used to. That's all I'm going to say. So mainly because there's a lot of hedging. What we're seeing here, a weekly basis, quite a step up. There was a gap, and it's just been left there. There's some gaps during the week, just early part of the week, just being pushed up, and it just looks like it may well continue in this direction. Of course, the Fed fund rate may change things, but that's been priced in already. The dot analysis following that time may change things, and the comments coming out may change things later in the week, but for now it's I say now, it's still Friday. Looking at here's Friday's data. For now it still looks bullish. In fact, I could have a quick look at the S&P futures. Should do really, see where they are this morning. Yeah, continue that sort of push towards the positive side. Okay, one last thing then, gold. Quick look at gold, sorry, just running into time. Gold just consolidating on this weekly basis, erring on a bearish consolidation. Actually, but if you're drawing trend lines across here, which I so often whoops, get the right one, there we go, probably use these two more recent trend lines, and well, it's still erring on the more bullish side maybe, but shorter term, intermediate time frame on these dailies, low highs, low lows, and then just wow, last week not really going anywhere at all. But to me, that consolidation in that downward move could suggest we see further downside, but watch out for later in the week. So as I said, this week really careful around Wednesday, Thursday. Have a great one. Bye for now.